Welcome to Hansel Financial. What to invest in? I know that's a very popular question out there. People want to get into investments, but they're not quite sure what they should do with their extra income. So today, I kind of want to just talk about some of those investment things, some things that you can put your money into to help it grow over time. Now, again, I want to start this video off saying that I am not a financial advisor. This is just my own opinion of different investments, so do not take my advice and do it because investments is also at a risk. It's not guaranteed that you're going to make money when you use these investments. So we're going to start things off with probably the most popular one, and that's going to be the stock market. And specifically, we want to talk about possibly investing in index funds for the S&P 500. Now, there's tons of different stock options and companies that you can actually invest in within the S&P 500. One, as an example, could be Vanguard. But again, the S&P 500 is a collection of the top 500 companies in the stock market. You invest in an index fund, you get a small piece of each one of those companies. And the main reason why a lot of people do invest in the S&P 500 with their stocks and their own finances is because over time it has shown, I believe the rate of return is about 8% on average every single year when you do invest into those index funds. The S&P 500. Now again, when you do invest in there, it's not a guarantee that it's going to go up every single year. You might have up years, you might have down years. What the past has shown with the S&P 500 index funds is that over time and over years, it has been positive about 8% of the time. And it's a relatively safe bet if you want to put money away in an investment, and this is going to be used for more long-term investment strategies. So you don't want to really invest in the S&P 500, just for a year, maybe even 6 months, because this idea is for long-term growth. So this could be part of maybe your retirement or maybe a 10, 15-year goal, something like that. So by investing in the S&P 500, it's going to be a pretty reliable, pretty safe investment for you. Again, you want to keep it in there as long as possible. So talking about your investments in retirement, another very popular one that a lot of people are going to be using for their investing is going to be their actual 401ks. And so most companies, when you work at a company, they're going to offer some type of 401k match. Not always, but the majority of the time they will. What I've seen mostly is about 3% is what they're going to match for you all. And so I highly recommend to try and at least put in that amount that they're going to match, because again, at the end of the day, that's going to be free money for you, because they're basically, hey, your company's giving you a 3% of whatever your salary or your income is toward your 401k. So you want to make sure that you are getting that full 3% or 4%, whatever the percentage is, because that's just free money into your retirement. And now with your retirement 401k, there are two different types of 401ks out there. There's the traditional 401k, and then there's the Roth 401k. And so what the difference is a traditional 401k, you don't pay taxes going into your retirement fund. So when you put the X amount of money in, you don't get taxed on it. But when you pull the money out of your 401k, when you finally do retire, then you will be taxed on that amount. And then on the opposite end, the Roth 401k, you will be taxed with the money going into your retirement account. But when you withdraw that money from your account when you retire, you will not be taxed on that amount. And you might be asking yourself, I don't know which one to choose. So a lot of people say when you choose the Roth side, you're choosing because when you're further along with your career and when you get closer to retirement, you're probably going to be at a higher tax bracket because you might be making more money with your more experience. And you could be 30, 40 years of experience in that job. You might have a higher position in your company, and so you'll be most likely making more money, and so you possibly could be in a higher tax bracket. And so if you were to put that in a traditional 401k with your higher tax bracket, you might have to pay more money in taxes when you do withdraw it. But again, with the Roth, you don't have to pay the taxes when you withdraw it. You just pay taxes on it when you go into the 401k. So for me personally, I do have a 401k set up, and I chose the Roth side. That's just me personally. Again, it's totally up to you. It's your opinion. You can choose whichever one you want. There's no real right or wrong with your 401ks. But again, the main point I want to get across to you all is that you do want to at least do the match of your company, because again, that's basically just free money they're giving you. So always try and put in whatever their match is, so that way that you're getting that free money from your company towards your retirement. All right, so the next investment I want to talk about has become really popular probably just in the last 5, maybe 7 years. And I'm sure you guys have all guessed it by now, but that's going to be crypto. And so crypto is going to be a little more volatile with its ups and downs, which I'm sure all of you out there know and see the price of different coins out there. Compared to the other two that I mentioned, those ones are way more, I would say, safer bets, but not as quick as returns. On the other hand, crypto, with the volatile, it could 1 year, you can make 20, 30% on it, but then again, the next month you're down 50% in the crypto markets. So with crypto, I do not recommend that you put all of your finances into it or to invest all of your money in crypto. I would say invest part of your money into your crypto accounts. And if you are going to invest in crypto, again, this is just my opinion, I'm not a financial advisor, but if you do want to invest in crypto, I would recommend that you try and stay with the two big boys out there, which is going to be Bitcoin and Ethereum. Main reason is because both of them have a large cap of money, so there's already a lot of money invested in those two. And in my opinion, I don't see those two coins really going away. All the other coins out there, they're not quite as big or as popular as those two, and so those ones might be a higher risk compared to the other two. But again, all crypto does have a risk. All investments have a risk. It's not a guarantee that you invest in something and it's going to go up. Same thing with your retirement, same thing with S&P 500. And even crypto, it's not a guarantee when you invest X amount of money into those stocks, into the crypto, that it's going to go up in 10, 15, 20, or 30 years. So just remember that whatever money you invest, it might not always go up, or it might take longer for it to go up. Crypto, you can invest in it. I do have some crypto myself, but again, it's a small portion of my portfolio, and that's what I would recommend to you all as well. Do not put all your eggs in one basket. Good advice for just any investment. You don't want to put them all in one type of investment. You want to spread it out evenly, so maybe one year this investment goes up and this one's down, and the next year vice versa, and so that way you have a good equalizer within your entire investments. But again, crypto, I recommend try and stay with the two big boys, Bitcoin or Ethereum. So another very, very popular type of investment is going to be real estate. Now, real estate can be a little more tricky because I feel like you need a little bit more money in order to get into real estate. I personally do not have any real estate. It is on my, I guess, to-do list or bucket list to own some type of property. I do think it'll be really, really fun to have like maybe a cabin in the woods, or a dream would be to have maybe like a condo or something like that on the water, and so that way, my family can go there because we just love the beach. It'd be fun to go there with family at the condo and then rent it out when we're not using it. Anyhow, real estate can be a great investment, but again, any investment, it's not a guarantee that that piece of property that you purchase is going to go up in value over time. Again, real estate throughout the years does go up in time, but again, with real estate, you're going to need to have enough money for down payment. You need to, if renters, or if you're going to put up for Airbnb. With real estate, again, it's a little more capital to start it up. You can't just say, hey, I'm going to invest $100 every single month in real estate. It doesn't quite work that way. You can do that with stocks or in crypto. Put your extra $100 into crypto every single month. Real estate, you have to, save up for it, and then you have to purchase the property. Then you have to manage it, make sure it's all the upkeep. And then you got to find people to stay in it to help you pay for the mortgage and get some cash flow. But real estate can be tricky to get started off, but again, real estate is a great option out there because over time, you're going to build equity in your house or in that property. And so in 10, 15 years, if you decide, hey, I don't want to rent that property anymore, you could sell it, and then you'll be able to make money on that equity of your property or your house. So another thing that you could do, I don't know if I really call it a investment, but because the feds have kept rates the same, what you could do also is put some money into a high yield online savings account. And with those higher yield saving accounts out there, some of them are actually up to 5%, maybe 5.25%. And so technically you could put money in those bank accounts and make some interest on those, and you are able to make some money that way as well. Now that way is a pretty safe bet. It's not a high rate of return for you, but it is basically a guaranteed amount of money that you're going to be able to make on that interest. So again, if you put X amount in there, every month the bank is going to credit you, but basically you have interest earned that's going to be applied back into that account. So if you do have a decent lump sum of money, a few $1,000s or 10, 15,000, you could put it into a high yield online savings account and be able to get that high interest and have that interest earned into your account. And so that is just about a guaranteed way to make some money on your cash. Now, again, it's not going to be your typical investment over time, 10, 15 years, because again, I'm going to assume and guess, in my opinion, that the feds will eventually be cutting rates maybe at the end of this year or the start of next year when inflation numbers start to come down a little bit. And so then when that happens, those high yield online savings account, those rates are also going to come down as well. And so then you're not going to be making as much money in those bank accounts that you were using. So again, it's not the greatest investment, but that is something that you definitely could do if you do want to have the safest bet to make, some money on your money that you do put in there. So all in all, investing is just a great way to help your money grow over time. And again, I will state it again, everything that I just mentioned in this video is just my own opinion. This is not financial advice to y'all. I'm just stating some things that I do in my personal life and what I've heard other people do as well. But again, investment is not a guaranteed way to make money. Again, it's a high probability that you're probably going to make some money over a long period set of time, but again, it's not a guarantee. Also want everyone to know out there that you need to be wary of those investments that might sound too good to be true, because they normally are. I want you to be safe with your money. Use some of these more safer things that I mentioned in this video. Don't try and just do these quick rich schemes, because a lot of the times they're going to be just scammers trying to take your money, and I do not want that. I know I work hard for my money, and I'm sure you all out there also work hard for your money, and so I do not want scammers to take that money from you. So again, be smart with it. Do your research. Even if you're watching my video, you can hop on YouTube, and there's tons and tons of great other YouTube videos and creators out there that talk about this same exact subject that probably go even more in depth than I do. This was just a quick little overview of some things to help you get you along your way. But again, I hope you guys found this video enjoyable, informative. Again, please don't forget to like, comment, and subscribe below. And if you want to check out one of my latest videos, you can click up right here. You guys have a good one.